The momentum has switched from being bearish to bullish.
After 3 days in the green, is this a sign of a bigger market turnaround or just a bounce ahead of earnings season?
Earnings is what makes the stock market move higher.
MarketBeat's Thomas Hughes dives into some of the strong early earnings reports coming out.
They performed better than expected. It really speaks well to tech spending.
With Mag 7 earnings reporting this week and next, could this bounce be the big turnaround retail investors have been waiting for?
We really could see this rally begin to pick up some momentum.
Will you miss the train or take off with this new momentum? Let's dive in. All right, Thomas, great to have you back on the show for what is now almost 3 days in the green. At least we hope that's where that ends. We're recording this around noon Eastern time on Thursday, and who knows what the market's going to do by the end of the day. I feel like it's a little risky to say we're on 3 straight days of green right now, Thomas.
It is risky because who knows what Trump will say. He's the one that's kind of driving the market right now. But the way it looks, the market seems to have bottomed, and we appear to be in a rebound mode.
And it's been that way for a few days now. Monday, really the week started off pretty rough. We had a pretty big sell-off on Monday, but 3 days turns into a little bit of a pattern for people. Is this a sign of a bigger turnaround?
It could be. It could be. What we have right now are what I've been calling the 3 Ds of the market rebound. We've got de-escalation, delay, and deals. April 9th, the peak of the tariff fear. Since then, we've had some delay to the peak of tariff fears. All right, so that's been pushed off. That helped the market start to bottom. Since then, we've also had word that potential for de-escalation with China, also helping the market to bottom. If we de-escalate with China, then that's going to help the business growth outlook. And then also now there's a possibility of deals. We've got Trump's advisors hinting that our other trade partners are looking to make deals. So if we get all these things working together, this little bounce, this rebound could turn from a relief rally into a really strong market recovery and potentially a melt up.
I think that's what everyone is hoping for right now. But let's talk devil's advocate the other direction. Could this just be a brief bounce of volatility in what has been a long few weeks of volatility?
Absolutely, because as I said, there's a lot of uncertainty. We've had some delays. We've had some hints of de-escalation and hints of deals, but nothing has really materialized. There's nothing been firmly set in stone. So with that in place, there's still the potential for negative impacts from the tariffs, not to mention business executives just not being able to make any plans. If they don't know what's going to happen, they can't make any plans or give any kind of firm guidance, and that's a bad headwind for the market.
Yeah, the uncertainty has been the name of the game the last few weeks, but there are some other indicators. It's not all just the tariff uncertainty. There's some other market indicators that are helping to move the market a little bit, and that's earnings season. We have a lot of reports coming out, some of them stronger than expected.
Right. The one that came out today that's really standing out for me is from ServiceNow. ServiceNow is a software company. They're cloud-based. They're leaning heavy into AI and automation and agents. They performed better than expected. They gave good, solid guidance. It really speaks well to tech spending and AI spending. So if we extend that thought to the Mag 7 and all the big tech names, NVIDIA, Microsoft, Oracle, Amazon, Google, all those names, which begin reporting tonight and next week, and they also all report well, we really could see this rally begin to pick up some momentum.
Yeah, that is going to be the real factor there. And like you said, Alphabet reports tonight. We're recording this before that reporting comes out. So we won't have that data in this video. But I think that there's a lot riding on these big Mag 7 reports. And in this run-up that we're seeing, all of the Mag 7 and really a lot of the big tech names are seeing some of the biggest increases right now. Is that maybe just a hopeful feel of people who have some positive outlooks on what might come out of earnings?
I think it is. I think people expect these reports to be strong. You have to think that all the impacts from the tariffs and potential business slowdowns haven't happened yet, all right? There's a fear that it will happen. So right now, Q1 was pretty solid. Q2 still looks pretty solid. So right now, even if the tariffs have a bad negative impact, we're not going to see it until next quarter or later. So right now, what we're looking at is a possibility for some really strong outperformance, some pretty strong guidance. One of the trends with the guidances right now that I've been seeing, we have seen some companies lower their guidances, but what's really happening is they're saying is it's too much uncertainty. We don't know for sure what's going to happen. Right now, the fundamentals are in place for growth and solid results. They could be impacted. Maybe not. We don't know.
Yeah, I feel like that phrase, maybe not, we don't know, is kind of how every investor feels right now as we wait to see where the market is going to land. And everyone is looking to see when is that bottom coming. And I don't want to get left behind and miss all of the main profits. But I wanted you to talk a little bit more about your theory on trying to time that bottom versus just getting on the uptrend too. What advice do you have for investors when they're trying to decide, have we hit that bottom or is this just another bounce?
So yeah, so the market sells off. We get the peak of fear, but the market hits bottom right at this critical level and it immediately begins to turn around. And since then, we've had those three Ds come into place and the market's begun to regain some traction. What we can really see though is that since this initial bottom, we hit a peak, we pulled back again, and have again begun to rebound. And in the indicators, we see rising levels of support, and the momentum has switched from being bearish to bullish. In this situation, it looks like we have a pretty strong signal, what I would call a trend following signal. We have what looks like a a pretty strong trend following signal that should take this market back up to retest the recent highs, if not set new ones.
That's a pretty positive outlook on the future where the market might be heading. But there are some other indicators that are kind of fueling your belief that there's a turnaround coming. And that's the general overall economy. Let's talk about some of those factors. Are most of those still fairly positive?
Well, right. For the last 2 or 3 years, a lot of the data has been pretty spotty and mixed. Manufacturing economy has been pretty crappy for a long time, but the service economy has been growing and is strong. Labor markets are strong. Consumers are still healthy. Retail spending is still strong. So all of these factors are still supporting economic growth. They could change soon coming up, but again, we don't know for sure. Tariff impact will have some impact on consumer spending, but probably not as much as we might fear right now because many of these companies are working hard to mitigate their supply chains. They're not going to be able to cut China completely out of the loop, but they've been working on these changes for over a decade already, so it's not going to be as hard as some might think. And so it's just a matter of wait and see what happens.
Yeah, speaking of consumer spending, let's talk about one of the Mag 7 stocks that has reported and came out like everyone really expected, but it wasn't great news either.
Right. Actually, you're talking about Tesla, and it reported a pretty bad quarter. I mean, and this is bad compared to an already bad expectation. It had pre-released its delivery figures. Delivery figures were down really, really hard, but revenue fell. I think it was 20%, which is a huge number for a company that was predicting growth for this year. And it's got nothing to do with the economy and everything to do with Elon Musk and his participation with Doge and his involvement with Trump. There's been a huge backlash against him from his consumers. I think I said in one of my articles that Tesla consumers could be described, generally speaking, as people that just don't like Trump. So for Elon to be going and being so involved with Trump's administration is really thumbing his nose at his own market, and he's hurting himself.
Yeah, Elon is certainly a polarizing figure right now, but there are plenty of retail investors who still really believe in his vision for the future of Tesla and really a lot of his different endeavors that he's working on. If that's you, check out this latest free premium report on marketbeat.com right now. It's all about Elon Musk's next big move and how you can invest in it. You can scan the QR code or click the link in the description of this video to get that free report on marketbeat.com right now. I don't think that this Tesla's earning is any kind of indicator of what the rest of the Mag 7 earning season is going to look like.
No.
Definitely an outlier there. But I do want to get to what you said about how earnings can really impact the market as a whole. And I think that that's probably because it's really showing where consumers are willing to spend or not spend. Talk about that a little bit more about why earnings season can have such a huge impact on the market.
Earnings is what makes the stock market move higher. When earnings are growing, when the companies become more profitable, their stocks become more valuable, and the market moves higher. So right now what we have in place is a huge earnings outlook reset. Many factors, including the tariffs, but also the higher for longer interest rate situation, have led analysts into a major earnings outlook reset. They've been lowering the expectations for earnings. Now, that expectation has not disappeared. We're still looking for earnings, so that's positive for the market. So once we regain our footing, we should be able to start advancing again. And the outlook is for acceleration. So from Q1 to Q2 to Q3, earnings growth should accelerate. It's just going to be at a lower pace than what we had previously expected. In that scenario, the market hits a stumbling block, corrects, will take a little bit of time to regain its footing and its traction, but with earnings growth in place and acceleration in place, we can expect the market to eventually resume the uptrend and move back up to new highs. Also, with the tariff de-escalation and potential for deals in place, that rebound could really gain some momentum if we get some positive news in that regard.
And positive news is what the market needs right now. And we're getting some of it little by little. But as it's paired with some bad news too, or maybe just chaotic announcements and news and changes, it still leads to that uncertainty. Let's talk about a little bit more about how this uncertainty could continue to impact the market no matter what happens during earnings.
Because we don't know the outcome of the tariffs yet, we haven't had actual de-escalation, so tariffs will continue to impact the outlook for the foreseeable future. We may get some relief rallies. They may be capped by fears. It just depends on the news cycle and what happens over the next few days and few weeks.
All right, Thomas, I want to end the video with one final piece of advice for investors out there as we're heading into this big earnings week and on the heels of 3 days in the green. How should retail investors play what's happening in the market right now?
Right. They shouldn't get too caught up in day-to-day market swings, especially if they're being caused by Trump's comments. Try to remember the fundamental outlook and don't chase prices. Wait for prices to come to you. And just stay the course with your investing plans.
All right, Thomas, thank you so much for your time today. And thank you for watching. Let us know what you think about what's going on in the market. Are we headed for a stronger green streak, or is this just another bounce of volatility? Let us know your thoughts in the comment, and let us know which earnings report you're most looking forward to seeing. We want to follow those stocks too. Thanks again for joining us, everyone. And as always, happy investing.